Members Voluntary Liquidations, or as you've probably seen them or your accountant talks to you about them, they're called MVLs. What is an MVL? This is the way to close a company down at the end of its useful existence on a positive front. So you have cash in your company that you want to distribute. So if you look at very typically what happens over the course of a business life, you generate revenue, you spend some of that revenue, you generate revenue, you spend some of the revenue, you get to the end at some point here. This has to be after 2 years worth of trade. You cannot do what's called an MVL using something called entrepreneur's relief within a 2 year time frame. You have to be on 2 years worth of trading history. So let's assume we've gone beyond 2 years here. The next thing to note is that you have to then know that you're not going to trade in the same sector for a further 2 years thereafter. So again, 2 years of trade and 2 years of no longer trading in that sector. If you believe you will continue or pick up new work or start again within 2 years after trading, you should not do a members voluntary liquidation because it could unravel all the tax benefits that I'm now going to tell you about. But again, let's assume we get here. What will then happen? You then say, I'm going to close my company down. You work together with your accountant and a liquidator. The time you need a liquidator is when the liquidation value of your company or the cash that's sat at bank ready to distribute is in excess of £25,000. If it's below that, you and your accountant can wind the company up without having to involve a liquidator. If it's beyond that, and hopefully it is, then obviously we need a liquidator involved. Things that will have to happen. You firstly have to announce that you're closing your company down. This is something that goes in the London Gazette. It's not negative, but it's saying I'm closing the company down. You have 3 months to challenge anything that I've done in the company. So if a mobile phone thinks you owe the money, or you owe your accountant, or anything else, that's the time frame that would happen for anyone to challenge those costs. Once it's gone beyond 3 months, you then pass the file back to your accountant, and your accountant and liquidator tend to work together. They will start to dissolve the company. Now this could take a further 3 months plus, very typically. And the reason being is you have to close your VAT scheme, you have to close your tax schemes, you have to wrap the company accounts up and file everything with Companies House and HMRC. Ordinarily what would happen is your accountant would pull together the account file for your liquidator, and they'll say, we believe there's X amount of funds available ready for you. They will then start to distribute those funds normally within 4 to 8 weeks after the process has started here. They won't distribute all of the money, and the reason behind that is there could be an overhang of liability to HMRC for tax, national insurance, etc. etc. But that's typically how a members voluntary liquidation works. Now, using entrepreneur relief, as I've alluded to in a previous session, let's say that figure is £100,000 that you've got to distribute. You have something called your capital gains tax allowance that you use to offset any distribution. A liquidation of this sort is a capital distribution, not an income distribution. And the difference there is these funds are not treated as income tax, they're treated as capital gain. Hence you get to use your capital gains tax allowance. So your allowance is just over £12,000. Let's keep the math simple, let's leave it at that. You have £88,000 that's therefore distributable after your capital gains tax allowance. That suffers no tax, this suffers 10% tax. So for you to get your £100,000 profit at the end of your business life cycle, it's only going to cost you £8,800 in tax. Now the only thing to know here is there are fees associated with this, and you'll have a fee no doubt from your accountant who will need to charge you for wrapping the company up, doing all the cessation accounts, the VAT closed down, the tax closed down, and your liquidator would charge you as well. Going through a members voluntary liquidation, a good liquidator will probably charge you around £2,500. You can get an awful lot cheaper online. However, from experience, these people are going to delegate all the work back to you, leave you hanging, basically trying to get everything resolved in your own time, and that's not the way you want to go out of a business. By using a sensible, qualified, good liquidator, you can get this thing wrapped up quickly, no HMRC headaches, and walk away with a very low tax bill.